Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another live stream and another week in the markets. We are back. Yesterday, we were out of office. I say we, the A1 team behind the scenes, we were out of the office for Memorial Day. So hope everybody who celebrates enjoyed the day off and also obviously recognized the holiday. So a little bit of interesting developments over the weekend. I did a short video yesterday just kind of covering the news in regards to the whole European Union and US kind of trade dynamic drama, which is ongoing as it is with many other countries. We have, in terms of a market reaction, real quick, let's just do a pulse check in terms of where things are at. We have got stocks bouncing back here since that kind of Friday move. We saw some follow through. NASDAQ, same thing. The Russell higher here. Gold is lower off of this, and the dollar index has moved higher as well. We also have oil making a push lower here this morning, and Bitcoin still holding steady near those all-time highs around 110,000 at the time of us filming here. So very interesting to just kind of see where everything is at. Indices holding up really well. If you've been following along on the channel here recently, then you probably know that I am already long the Russell. I bought the Russell in anticipation. I'm not going to say that I told you so, but I kind of told you so. I'm kidding. Of course, markets are very hard to predict, but with the whole, 50% tariff threat and then pulling back that threat, that's not the first time. It's not even close to the first time that has been the playbook here recently with all the trade stuff. Consistently, what we have been seeing is big, scary threats followed by backing it off. Big, scary threats, backing it off. Big, scary threats. And the big, scary threats are obviously a negotiation tactic, right? Again, it is, the classic Trump move, big swings in the opening of the debate or the negotiation, and then, dialing it back. So we've been seeing this pattern here recently. It's been a persistent one, and has made some really interesting moves in the indices world, right? You had this big, scary, all or nothing approach, and then we saw the 90-day pause, and since then that was actually a pretty incredible bottoming signal, despite how scary the headlines got. But we've seen that on a smaller scale a couple different times. So-and-so's not cooperating, 50% tariffs, market drops, and then boom, we're bouncing back already. I personally think path of least resistance for indices is a continued move back to the all-time highs. Why? Well, because again, it is pretty clear. I think most people are now seeing that the likely scenario for all this trade drama is not the worst case one. The worst case one was 7 million%, an arbitrary number taxed on Chinese goods, right? Because they were never going to stick. They were so high that it would just bring the whole world to a crashing stop, right? That was the fear that caused the market to sell off. But it doesn't look like that's very likely to resume, right? US and China trade relations are going better than that was, right? Where they were kind of in a tit for tat kind of thing, right? Jumping higher and higher each and every day, back and forth. US said 100 something, and then China would fire back and say the same. And we've come back from the ledge a little bit. And so I do think that the path of least resistance here is now, okay, there's other sides of this. this whole, administration that could be potentially perceived as very positive for markets. For example, taxes being kept low, or finding new tax reductions. Those could be very bullish things for stocks, which would obviously, that's improving their profitability. At the same time, less regulation involved typically is perceived as a positive thing for stocks. So there's the negatives, which is the uncertainty around the trade dynamic, and then there's the positives of more favorable business conditions, at least perceived by Wall Street, right? So that's the concept. And I think that we're going to see more of that in the back half of this year. And I start out this year with a target of 6,600 on the S&P 500, and I still think that is possible. But I still think it didn't look very optimistic when we were down in the dumps here, but the bounce back has been really remarkable. And it's a 12% move here in the second half of the year. I think it's possible. It's a bit ambitious, but it's possible. Good morning to everybody in the chat. Thank you for being here. What's up, Bulent, Ball Out? Good to see OT in the chat. James is in the chat. Good to see you guys. Hope you're doing well. Lots of stuff moving here in reaction to all of this stuff. You had, like I said, a bounce back in indices. I went long the Russell on, what was that, Friday? Yeah, I went long the Russell on Friday. We've had a nice bounce back so far. We'll see if that can persist. But big fake out there, big fear event, right? And then suddenly buyers rushed back in. I'm curious to see where the put to call ratio is in recent times. Let's take a look at that. Yeah, so put to call ratio back to fear levels, right? So you're seeing people scared about markets. That's the perception. When this reading goes high, if you're new to the channel, put to call ratio is one of my favorite indicators to keep an eye on for sentiment readings, right? Because what happens is you get everybody rushing to buy puts when they're very scared, and everyone rushing to buy calls, making the call ratio, or the put to call ratio, when there's more calls traded, this level goes down, and when there's more puts traded, it goes up. So when puts are in high demand, that tells you that sentiment is bearish. People are buying puts like crazy. They're fearful of what could happen next. And so we see a lot of that happening here recently. Does that guarantee that the market is going to snap higher just to spite all these people? No, because it could do one of these things where it actually elevates even further. I just think that generally speaking, if this is above this blue line, the high put demand level, that's going to be, generally speaking, a bit more of a contrarian bullish signal for me in my own trading. Now, that's not the only thing I look at. Obviously, I look at a wide range of economic data and sentiment data to make a decision. But this is, again, like I said, elevated, and to me, produces a bit of a contrarian bullish perspective on indices, which sounds weird. You're like, how is this contrarian? The indices are up. Well, yes, but sentiment wise, people are thinking this thing has to crash. It's going to go down. And what we actually see is a high demand for puts reflected in the price. So that actually tells me, okay, the squeeze could be pretty nice. We could see a very quick recovery here and just grab basically all the, the stops or whatever, right? Squeeze the sellers a little bit more. So we'll see. But I do think that the path of least resistance for indices is still to the upside. I'm very curious to see if I'm right about that. If I'm wrong about it, then obviously we'll stop out and reevaluate the idea. So something to monitor. We'll take a look now also at institutional positioning, see how things are going. Our last update was, of course, last Friday, May 23rd. So somebody asked in the chat, when is the latest COT buys and sells updated? Every week on Friday, we get new data. And so we have our, except for holiday week. So there actually may be a delay in the COT report this week due to the US holiday. If you have the EdgeFinder, you can always read about holidays and how they impact the COT report right here. Click this link, and that will help to answer that. So, anyways, latest action I thought was really interesting. They bought the Russell, which obviously I'm long the Russell, so I'm glad to see this. They added long contracts. They decreased short contracts. Definitely a bullish weekly shift on the Russell side of things. They also bought the Nikkei, they bought the Dow, they bought the S&P 500. They didn't really buy gold, but they closed a lot of shorts on gold. It's kind of still a bullish move. It's not a huge bullish move, and we see gold lower here today. But let's take a look at the sell side. We see the Australian dollar got sold, Canadian dollar, the Japanese yen got sold, which is moving lower today. Yen pairs are moving higher against a weaker yen. You've got euro on the list, and then some selling on the NASDAQ as well. Added shorts, decreased longs. So speaking of the Japanese yen, I do have 2 yen positions long. I'm long dollar yen, still in drawdown on this one, and I'm also long the New Zealand dollar against the Japanese yen, also in drawdown on this one. I do think both have potential to squeeze higher. These are very, very small positions for me that I'm looking to scale into. If the dollar yen continues to go lower, which I would prefer, if we can get a fill at 141, I'd add a little bit more to the trade here and here. That'd bring my my cost average around this area. So we'll see. If the price keeps going lower, then great. If it goes higher, then I'll look to just take profits on the move if I can. Euro back towards those highs, still stuck in a range. I'm pretty neutral on this pair. If I take a look at our top setups page, actually what I can do is I can pull up our top setups simplified page, which I love this page because what it does is it just summarizes the score even further for you. And the bigger text is also way easier on stream for people to see, I think. But anyways, what I can do here is I'm going to add in all of our major currency pairs. And what you can see is pound dollar is getting a bullish rating. Dollar yen is getting a bullish rating on the EdgeFinder. Everything else is pretty much neutral. The Australian dollar, the euro, the Kiwi, the dollar against the CAD, and the Swiss franc against the dollar, all getting neutral readings. So those are not really tradable ones for me. Pound dollar is a +5, so it is a possible setup, but I would need to see at least a pullback into some support here to potentially get a long position set up on the British pound against the US dollar. So that's the FX side of things. Gold here this morning moving lower. Bit of a rejection off this 4-hour channel that we've been watching. I posted about this in our Telegram channel, which, by the way, if you are not in our Telegram channel, it is completely free to join. And we're about to do a giveaway in there. Maybe we'll drop the link here in the chat. So if you are not in the Telegram channel, we're doing a giveaway currently on a gold VIP membership, which is a lifetime membership within our Discord community. I'm about to drop the link for this. So here you go. That should be in there now. If you would like to enter for a chance to win, here it is. Step 1, join the Telegram channel that just got linked in the live stream chat. It's on your screen right now. It's also in the live stream chat. If you're watching this at a later point, you can also use the link in the description down below, and you can still enter the giveaway even if you're watching this 10 hours after this recording was happening. We'll be doing this during this week and announcing a winner on Friday. So if you'd like to enter for a chance to win, step 1, join our Telegram channel. We post chart markups every single day. Why not take advantage of the free stuff that's in there? And step 2 to enter the giveaway, right? There's step 1. Step 2 is to simply throw your name in the hat for a chance to win using the link that was dropped there. So good luck. I hope you win. And the winner will be able to see all the trades that are taken by myself, Alan Perez, who's joining us on June 2nd. And then Ivan also. We do coaching calls in the group. You get access to our chat room. You get access to our educational library, and much, much more. So you get every trade alert that we take. And obviously, usually that is a paid service that we offer. But for one lucky person who enters, you'll get it for free. Let's see. So gold on a 4-hour chart perspective, rejected here, rejected here, rejected here. So clearly, before we get too bearish, however, you are sitting now at a pretty clear level of support. And this is actually a pretty big decision point for gold, because if you're looking at this on a 4-hour chart, right, clearly sellers have come in and push this thing lower each time it's hit this kind of downward trend line, putting in a series of lower highs. Is this going to be another lower high? Well, the way we would determine that for sure, if I was being super technical with it, would be if we saw this type move, which is basically breaking that previous low. That would just tell me straight up bearish on this chart. However, we do have the potential here to see something like this, where we reject initially, but we don't follow through, and buyers are able to push this thing through. So what we'd want to see, if you're a bull, you want to see price hold this 3,300 level that we're currently sitting at and push up to the next zone. Right? So like if you're very bullish on gold, that's probably what you want to see today. You want to see the rejection of or this hold of support, and to do one of these guys, right? Because then you're talking about a change in the way this market is reacting. Right now, the expected thing is like, okay, it's kind of hitting a resistance point, downward trend line. It very well could just keep going down and maybe go back to test the lower limits, right? Move down to 3,100 or 3,000. So we're at a decision point. So we'll see how price reacts. I'm personally very neutral on gold. I do not have a bullish or bearish perspective. On a longer term basis, you're sitting looking at a very strong upward trend. I would not be surprised if the bigger picture does continue to trend higher, but right now I'm very neutral on gold. So I don't really see huge downside or huge upside. I've said this in my recent streams a lot. My path of least resistance kind of bias for gold at this time is really truly just not too far in either direction. I don't see a huge reason to be bullish. I don't see a huge reason to be bearish. And when I say I don't see a reason, I'm talking about staying systematic. So if I take a look at our top setups page, specifically looking for, let's just isolate metals for a second. So I'm getting some bullish readings on copper and platinum, but gold is currently getting a +3 score, which is a neutral reading. On the EdgeFinder, if you get 5 or greater, right, that is a bullish score. And if you get -5 or less, then that's a bearish reading on the EdgeFinder's scoring system, right? So right now with gold getting a +3, it is not on the bullish side or bearish side. Now, how is it getting these scores? If you're a new viewer and you're like, what is the scoring mechanism? All this is doing, it's not a black box algorithm. It's quite simple. It's looking at each of our key metrics, like the commitment of traders data. It's saying, what are institutional money doing with gold? Okay, if they're doing some bullish activity, give us some points to the bullish side. If they're selling a lot, give us some bearish points. Retail positioning, right? Is the crowd super bearish or super bullish? Right now, they're leaning bearish on gold. What about seasonality? Is it a seasonally strong time to be a gold bull? Right? This is very logical. It's very straightforward. It's not black box. Is the trend up or down on a daily chart? GDP numbers. They were weaker than expected. Is that good or bad for gold? Right? That's good. Gold thrives on economic weakness. And you can repeat the process. It gets a little bit more complex if you're not a fundamentalist, if you're new to fundamentals. Is inflation falling? Is it likely that the Fed will cut rates? The algorithm internally considers interest rates, unemployment rate, employment change, inflation, retail sales, services PMIs, manufacturing PMIs, and it does all of this automatically for you and generates a watch list. That is what the utility of the EdgeFinder is, right? So sometimes people ask, how does it derive this score? And that's an oversimplified version of how that mechanism works. It looks at a collection of sentiment analysis tools, technical analysis tools, and economic data makes up a large amount of the scoring for the EdgeFinder. If you'd like, by the way, to explore the EdgeFinder's systematic approach more, check this out. Head over to a1trading.com/edgefinder-tour. Another way you can get to this page is just go to a1trading.com, hover over EdgeFinder, click on tutorials, and you can read to your heart's content about how our system looks at data and how it helps traders to spot fundamental and sentiment trends that are very powerful in markets. If you'd like to explore this, you can also, if you have questions about the tool, you can also speak directly with a member of our support staff. And I'll drop the link. Oh, we already got beat to it. Thank you guys. So there is the link. If you guys just want to click that, bookmark it, take some time when you have it after the stream just to read through how the EdgeFinder works. It's a great way to know if it's the right tool for you or not. And we also offer 30-day trials. So just explore the website. Head over to a1trading.com and you can explore all the tools that we build for traders. So in terms of my own stuff that I'm watching here today, so let's just go, let's add everything in, and I'm just going to go into, I'm going to remove neutral readings. So I am looking at indices. I'm already long the Russell, going to watch things like the Dow Jones, the DAX, the S&P, the NASDAQ. So indices, I am bullish, looking for pullbacks. Yen pairs, I am bullish, but already in 2 yen pairs. So I'm not going to add to the trade unless we get some better pricing, lower prices. Dollar yen, I'm already bullish. Like I said, I already have a position there. CAD Swiss, I already have a position on this one. So I have several FX trades currently. If we scroll down here on the bearish side, you have Euro Pound. This chart is not at a level that I can trade it, but I do like the short side quite a bit on Euro Pound. So Euro Pound is one of my favorite FX trades right now that is just not setting up just yet. So if I go to Euro Pound, you know, this thing, if it were to give me a little bit of upside, so for example, if we were to poke up into the overextended range, it's just a simple indicator that we've built at A1. You can get it on the website, a1trading.com, like I said. But I'd be looking for some overextension here. If we can get that, I will probably be short Euro Pound. I shorted over here, did pretty well with that. Ended up taking some profits on that move. Would love to repeat that process. You can see these clusters of kind of overbought stretch stuff have actually been pretty good timing indications in recent times. So I'm not bullish, so I'm not really interested on the buy side of this one. But if you get a couple, you know, give me a spike to the upside on the euro against the British pound, I'll probably be looking to get some short positions filled on Euro Pound. So that's on the watch list for me. Another one that was on there is the Australian dollar against the Kiwi dollar. I got out of this trade. I took a profit on this one. Same concept here. Would like to get short again, but gonna wait for some overextension, right? Just give me a little bit more of a poke to the upside, and then I would prefer to get short in that range. So watching Euro Pound and Aussie dollar the Australian dollar versus the New Zealand dollar. And those are kind of top of mind. Let's see what else. Bitcoin is a bullish reading here, but a bit stretched for me. I'm curious about copper just to look at it. So let's see. Copper actually looks really interesting. We've had this kind of downward trend breakout. I like this support level around 4.6 for copper. I'll keep an eye on it. Any new updates or features coming to the EdgeFinder? Yeah, let me show you one I did this weekend. This weekend, I spent some time building out and improving something really fun. Our EdgeFinder score history page. Check this out. So I'm just going to throw this a couple months back, and I'm going to show you what this tool does. So this is a new and improved version of an existing feature on the EdgeFinder. It's a historical score of the EdgeFinder. So this is past EdgeFinder scores versus the price of gold. So for example, you can see that the first time that we got a bullish reading on gold notified to us on the EdgeFinder, we can hover over this and we can see that was February 6th. And what you can see is that, let's actually mark this out. So February 6th is right here, right? So February 6th, approximately here, is when we first got a bullish reading on gold for the EdgeFinder. Then we can go all the way, just for reference, to the first example of when we lost a bullish rating. Remember that bullish is 5 or greater, inclusive of 5. Technically, the first one was right here, right? So a little bit of upside was caught. and then we lost the rating. Well, then we got another one. So technically, here is our next bullish example. And you can see this one lasted. We stayed bullish on gold all the way until our next neutral reading right here. And pretty much during that whole time, that was the legendary kind of, well, I say legendary. It was my best trade this year, was this one right here. EdgeFinder gave us a really strong reading as far back as, February 6th, February 13th, somewhere in that range. Stayed bullish persistently. Got maximum bullish around March 6th, March 5th, which is right around here. And then we had this massive run on gold. So all this is doing is it's just showing the historical score of the EdgeFinder versus the price of the underlying asset in question. So I worked on this weekend. I was pretty proud of it. I thought it was a cool indicator to help show, the score mapped out against the price. Wow, look at this. We have a brand new channel member. Ash, thank you very much for becoming a channel member today. I greatly appreciate your support. We always say that on the channel, if you are a channel member, you are sponsoring our coffee fund here at A1 Trading. We have a team of, well, right now we have more people than usual. We've got 2 interns this summer working for us. So that puts us at 7, 8, 9 people in the office. And then we have a couple people that do work for us beyond the office. So we appreciate it. That goes right towards our coffee fund, and I appreciate it. Ash, if you have any questions, I do my best to prioritize questions from channel members who are, like I said, just supporting our coffee addiction here at the office. So thank you. But anyways, yeah, so this is a new feature that I've been working on, and I thought it was useful. I thought it was helpful just to get an idea of the historical score. And so what you can see here, notably for gold analysis right now, is you can see we lost that bullish rating right around April 25th. Once everything kind of had been cooling off with the worries about the trade dynamics, we lost a bit of momentum on gold. We also had some pretty better than expected economic data out of the United States, which helped to smooth sail a little bit things as well. And you can see gold prices have actually gone sideways since then. We haven't really moved since, what did I say, April 25th? So if I go April 25th, right? April 25th is right around here, was the first time that we got a neutral reading. And you can see from there, we are literally just about flat to negative since then. So just something to think about, right? So, and this is what we talk about often on the show. If you're going to be trading something, some traders love to kind of reiterate, I only trade gold, I only trade NASDAQ, I trade euro dollar, and that is it. But what we have to think about is that sometimes the best thing to trade changes. Sometimes the flow of traffic is really congested. Other times we got smooth sailing. And so if you only trade one thing, the downside to trading just one thing, like I said, is that sometimes it's very difficult to make money trading gold if it's just chopping back and forth. Yeah. One day I'm going to have AI count the total number of times you said EdgeFinder in your live videos over the years. I'm sure it's a broken record. Oh, definitely. I say it every day, at least 100 times. Most consistent salesman. I appreciate it. I mean, I never shy away from the fact that the tool itself is worth every penny. It is a sales pitch anytime I'm showing it, but it is a sales pitch that you should take advantage of because the value add from the EdgeFinder, like I said, I think it's worth every penny. Not everybody thinks that. That's fine. But, if you're somebody who sees the value in spotting economic trends, spotting, sentiment extremes, if that is something that you're looking to do, you can do that without purchasing a product. So I'll be transparent as I can about that. You can track some of this stuff without looking at the EdgeFinder. The benefit that many of our customers do is they say, I don't have the time to do that every day. I just need a tool that scans that stuff for me and shows it on my screen so I can focus on the charts, so I can focus on trading. And that is why we're in business, right? People like the convenience of the EdgeFinder. They let us do all the data pulling, right? We do a lot of internal work to curate the data, to make sure the data imports are on time. When stuff breaks, we're fixing it. So from your perspective as a user, you just get to pull up the data and we take care of that for you. That's the service that we offer. So yeah. EdgeFinder has transcended my trading. I appreciate that. I'm glad to hear that. I mean, it's a, at the end of the day, it's a huge time saver, and it is a confluence tool that, you know, I use all the time myself. I mean, every single day it is integral to what I do now in markets, because I could do the stuff that I do without the EdgeFinder, but it would involve a tremendous amount of time dedicated every day just to going and pulling data manually, which is just silly. What do you extrapolate market data anyways with? Xavier, we have hundreds upon hundreds of automation scripts that we have programmed, and sometimes they break and we're fixing them. A lot of code. S&P, NASDAQ, a little bit of an intraday reversal here. Check out the 5-minute chart. We're up in the pre-market here and then down here a little bit this morning. NASDAQ down a little bit here. My Russell trade turned around here this morning, but still we're doing okay on this one. Like I said, if we break through these lows, that will be a signal for me to close out and take a loss if needed. But I do think path of least resistance for me on the Russell, on the indices in general, is higher. I do think that we are just having a pullback, and that likely the path of least resistance on indices is higher. If something changes, if news, you know, changes the dynamic and we stop out, then we stop out, we reevaluate. The DAX also, look at this, already ripped to fresh highs. This thing is such a beast. Such a beast. Nick, do you use AI to fix your code? Yeah, I mean, actually, AI, we use it all the time for programming. I have you know, 2 people on my team that do the programming side of stuff much heavier than I do. And the cool thing about AI is it just makes them way more efficient, so we can do way more projects. I'm actually a believer. This is side note from trading, but I know a lot of people are so afraid of AI taking over everybody's jobs. But in my opinion, AI creates jobs. It's an interesting take, but I could delve into that for 3 hours, but I'm not going to do that. But the long story short is, from a personal basis on a small business level, what AI has done for my small business has made it so that we can do way more projects per person. Sure, a project doesn't take as long because you have AI, but now we're just doing way more projects, right? So it creates the ability to create way more things and to do way more projects. So does AI destroy jobs? Sure, it probably does for like monotonous, easily automatable jobs. But for creative people, AI is a superpower. Cedric, small business as in we have, you know, we don't even have 15 people here working. We're definitely a small business. Also, I'm not sure where you got our sales numbers from. Those are definitely not correct. Okay, so anyways, taking a look here, the VIX up a little bit this morning. Oil still holding rejection here. Also, 100K in sales is absolutely tiny. That's like a boutique shop on Etsy. You know, did you know, you guys, you want to hear something crazy? If you go into $100 with $100 into Walmart, I want to ask you guys in the audience a quick concept. If you go into Walmart and you spend $100, how much do you think Walmart profits off of you spending $100 at their store? Does anybody want to take a guess? Hint, it's crazy. You go into Walmart and you spend $100. You check out, you spend $100 at Walmart. How much do you think is profit for Walmart? Morrow says 30. 25. 25%. $8. 5. 10. $10. So you go into Walmart, you do your shopping on average across people visiting their store based on their profit margins. How much do you think they make? The answer might surprise you. I'm just going off of their profit. Now there's a lot of accounting stuff that makes this a little bit harder than what I'm going to say, but I'll tell you this, their profit margin, which we can pull up just for fun. If I go to Walmart, it's a publicly traded company, so you can pull up a lot of this information. Their profit margin, where is it on here? Here it is, 2.7%. So if you go to Walmart and you spend $100, the oversimplified amount of money on average based on all their revenue, they make $2.70 for your $100 that you spend in Walmart. People do like the perception of like what it costs to run businesses is very, very expensive, right? So people think I'm giving $100 to Walmart. Well, really, after all the costs, the labor, the stacking the shelves, the negotiating with vendors, with all the real estate costs, $2.70, right? So if you're making 100K in revenue for a company, that is like absolutely tiny because businesses are expensive to run. Some of the better companies, well, some of the amazing companies that we know, this just to contrast that. Now, obviously that's retail, which is a very low margin type business, high revenue, high amounts of volume. But then we could take a look at, for example, like let's do Microsoft. This one's kind of fun to look at too. So if I'm looking at Microsoft, this is a company that operates on very high margins. Look at this, 36, 37%. So in that case, you spend $100 and they're making 35 off of it. That's really high. That's very, very high margins, right? So it's just something to think about. It's interesting. Yeah, ball out. Yeah, it's about 3%, right? So if you spend $1,000 at Walmart, they make $30. It's not perfect because there's also like some accounting strategies and expense writing and reducing their net profits in terms of accounting that they do, right? There's many strategies they do, but it's just more, the point is profit margins are much thinner than a lot of times people think, especially for like really big companies like a Walmart, whose primary objective is to like squeeze prices lower to take up all the business, right? It's an interesting strategy. But yeah, so what it does, right? Why take such a small cut? Well, and that's why everybody goes to Walmart, because their prices are so good relative to most. So it squeezes out other people from threatening to take their business. I mean, I go to Walmart all the time. The prices are just so good. Anyways, sorry for the side. I just thought that was an interesting conversation I was having this weekend. Thought it was fun to share. Let's take a look at the dollar here. Dollar is sitting just shy of this previous low around 98.50. Buyers trying to hold up. I do have a neutral reading or neutral bias on, let's see if we can pull this up, on the EdgeFinder as well. Most of our data points are pretty mixed here. You've got US dollar getting a 46% of indicators saying strong for the US dollar. So that's not really it's just a very middle route, kind of neutral reading. Some of the weaker currencies in terms of economic reported data compared to forecasts are things like the euro, the Japanese yen, and that's it of the majors. If we take a look at the bullish ones, the Kiwi dollar, the Australian dollar, and the British pound. British pound has been on fire here recently. And so I've been using that indicator quite a bit. ever since we finished putting that together, this is just such a simplified version of what I'm looking for economic data wise. I don't even need to look at the economic data just to get a general idea of which economies are outperforming expectations versus underperforming. And so for me, I generally am looking to buy the winners, right? And sell the losers, right? Or the ones that are missing expectations. Nick, what do you think about leveraged ETF TQQ? I mean, it's what it is. It's what it says. It's a leveraged ETF. I don't think it's a smart idea to hold it long term, because if you're holding it long term, the erosion that you're going to have from the cost of holding leveraged products, you're essentially borrowing money. So people sometimes wonder, why shouldn't I just buy and hold TQQ? Why would I ever just buy the NASDAQ and hold? Why shouldn't I just hold TQQ, which is a triple leveraged version of the NASDAQ? Well, the reason is because money is not free to borrow. So when you buy this ETF, you're essentially borrowing money, right? Because to get that triple leveraged, how does somebody get triple leverage on an ETF? Because you have to borrow money to create that triple return. So if, $100, if you want to triple that return, you need to trade like you have $300 in it. So to borrow that money is going to cost something. That's why when you hold this ETF, it is, losing money to that interest or that borrowed effect with the underlying. Okay, guys, up next, we have Ivan FX taking over the stream. I'm going to pass it on. We have an intern starting today, and I want to go help with that situation. We're someone joining on the software engineering side of things for the summer, which is exciting. So I'm going to move on and go help out with that dynamic here this morning. We're going to pass the show over to Ivan FX. Before we do that, let me just remind you guys, we are doing an EdgeFinder. Actually, sorry, we'll do EdgeFinder maybe next month or something. But we're doing a gold VIP membership, which is a lifetime access to our VIP Discord group. If you're not in the VIP Discord group and you would like a chance to win a free lifetime access, step one, here's how you join the giveaway. Step one, join the Telegram channel, which has just been linked in the chat for us. Thank you, Chandler, and thank you, James. And then step two is to head over to our Telegram once you're in it and just put your name in the hat here, and then you're entered for a chance to win. We will be announcing a winner on Friday. Okay, up next, we've got Ivan FX just after this quick break. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good day. Hope you guys are back from vacation. We're meeting on Sunday, and I said two things. I said, if we make a higher high, I'll buy the pullback. If we hit target on a Wednesday, in the morning of Wednesday, I'll take the profit. The problem, number one, is it happened so fast at night that I did not tell that I actually entered the order until it was boom, far gone. So, what did we learn from that today? It is the process. It is the fun. It is the 38.2 retracement. That's not a holy grail, but I'm just telling you, once you make a higher high, when you break the previous high, You don't buy there, you don't buy there, you don't buy. Okay, you can buy there too, but the better placement is somewhere at a 38 to 618 retracement. Stop loss should have been a bit lower, but fair enough. Almost, I don't know how much that is even. Is that about 10 pips in drawdown or whatever? And then, boom. Min, you were there. Can you clarify? Can you tell everyone that I told everyone this? Smarter boxes. Why do you talk like this? I do apologize for talking like this. So, but we had a huge turnout on Sunday. So the reason why I say it, because everyone is coming for me. Well, like, hey, but you didn't post it. Hey, you didn't tell us when you. Well, I'm sorry. It was 3 a.m. Sorry. Same story for British pound, Japanese yen. About entry at 193.21, stop loss about 192.60. Went to R2 and took profit about 195.14 or something, 15. A bit above where I initially said I would do, but also Wednesday morning, hit target for the week, hit what I want. It was a straight line up. That doesn't mean that this can't continue up, but whatever I think should have happened has happened and has gone so quickly higher that I'm like, whoa, 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 whoa. Okay? That's why I say, whoa. Min says, I did. He entered himself. It was great. Then we are all good. Didn't you close out multiple losses on yen? Yeah, ball out. Yeah, I did. So I'm just trying to recoup my losses, if you're wondering. But can we celebrate today with profits ball out? Come on. Celebrate. Clap. So there is another thing that I said on that very same Sunday. I said we might go higher. We might peak early, we might fall, and we might turn around and go up by Friday. And believe it and not, it actually has happened on Aussie dollar, it's happened on the euro dollar, and it's kind of happened on pound dollar, and kind of also happened on New Zealand dollar. So where is the next moves? It is one, if you haven't sold the dollar pairs, totally up to you. If you haven't sold it, I would say wait. I think it can continue more, fall a bit more, and then continue higher. So going back to how Nick does things with me, okay? What do I really think? Okay, sorry. Let me change again. What do I think about S&P 500 or the stock market for that matter? I said on Sunday that was about that price, that I am bullish, that I think this is going to make a higher high. I have said that to numerous people in DMs. If I haven't said it online, I believe. For this very simple reason. We have a risk on situation at the moment where market believes that we're going to make money going forward. And the tariffs or the geopolitics or the wars or the doomsday preppers in terms of we're going to crash and we're going to die, the market doesn't believe it. Okay? The market doesn't believe, at the moment at least, that we are going to do that. But I said another thing, and this is not me. This is just me being me. I really want a pullback, and that might have been the one on Friday. But I really want a pullback on Friday, maybe lower than 20,700, and that is the new entry for June. So that in June we can go higher at least the first week, potentially, hopefully, maybe also 2 weeks, so that when we come out in July, August, that is the peak. So what am I thinking? I am thinking very easy peasy lemon squeezy. So if that was to drop and we drop again, and this is about Friday 30th, and then we do a whole reversals of trend, that probably better that are our potential entries. Now, if this doesn't happen, I don't care. I really want to pull back. I really don't want to buy high. I don't want to buy in this situation. So if I can get that on Friday, I would be very, very happy. What could I am preparing you for a situation, okay? That's all. So if I were to be me, I'll sit on my hand waiting for this pullback. This move right now is not enough for me. I really want a lower low. If I can get that on Friday, then I'd be very happy. Or I'm not interested in trading this as it stands. That pullback was too fast. Yeah, and also it was because of the announced supposed tariffs in Europe, and that's not a situation that I want to buy into. So I said that move there lower is not necessarily, it's not something I really want to be trading. It's not realistic trading, but I want to say, what can I do? What can I prepare for going forward? Because what I imagine, and what I'm imagining, and maybe that's just me in my world, but what I feel traders are struggling with is to plan ahead and see, okay, other than the chart, what is the potential for A, B, C, D, E to happen? Meaning, if we drop again, okay, that's great. But what I see sometimes when we see strong trends and we look at the COT report, the retail sentiment, everyone starts flocking and be like, whoa, 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 and then start buying high, or they start selling into it, by the way. It's going higher, and you're wondering what's going on. Why they're selling a market that goes higher, and it goes quickly higher, only for them to start buying when it starts falling over and going into a bearish trend again. And what is that is to, in my view at least, is the failure to imagine or to have proper likeliness and probabilities calculations done either in their head on a piece of paper or something that says what is the likeliness of the next move. Because if I can get a bottom like I did on pound yen today, pound yen, euro yen, I'll be more than happy, right? So I said that should happen on Sunday, and I said that should happen on Wednesday, on Sunday. And now I am also going to say on the yen pairs going forward is I really want potentially equal low again, but that has to be Friday. Monday. Probably Friday. So full Thursday, so Wednesday, Thursday, and then bottom out on Friday. And if this now continues higher for whatever reason that is, then great. But my plan has completed. The move going forward is up to the market, and I cannot buy a higher high. I cannot buy the highest high. I cannot buy all-time high. It's not in my business. It's not in my charts. It's not in my head. It's not in my plans. How do you set your timelines? Why Friday, not Monday, for example? Okay, so there's a bit of math here, but the reason is it's the last trading day of May. And why does that have an insignificance? Because June is the end of the season, end of January to June season, there will be a lot of rebalancing. There will be a lot of reduction in position sizing because you need to be within your mandate more than likely. So there is a retake or a pullback, for that matter, in certain assets and asset classes, and that prepares you for the summer. And not all years are all years and years is that happening, but I'm imagining that it does happen more than anything. And I don't know about S&P 500 specifically right now in my head, but we can always double check if that happened last year in Nasdaq. That would be about there, yeah. So that is from this one. So that would have been 96,000 equals. And going into the next one, they are down to 87 and 80. So last year, about the same time last year, they both decreased about 9,000 and 16,000 positions. And then it continued to decrease into July, into August, before it picks up again about that is August, about August again. But there's a pickup again, another take profit, and another pickup again going into December. That's kind of what I'm planning to do. So yeah, that's the data that I've been provided by the market and the behavior that I've seen and observed throughout the years. It may or may not happen this year. I don't really care, because more than anything else, going into August, I am very cautious about. Okay, it depends. This is probably a news event more than anything else. But going into August, going into July, going into September, for that matter, whatever that year is, and whatever that day is, and whatever that month is I know that that's more than likely. But I need to prepare my mentality, because where I see the crossover, for that matter, on the 55.21, or something that says we are no longer bullish, or the crossover of 55.200, for that matter, like there, we are dead, we are done, then the drop that generally tends to happen is that institutional money, or whatever that happens in the background, doesn't matter what you can call it, is dropping everything at the same time, and it's hard. So it's elevator down, lift down, elevator up. General moves. So I don't want to be caught in that kind of situation. And if I can wait until August to get about the same price that it was in June, I'll do that. But and Jay Roberts comes in and saves my day today. Says that US confidence comes in higher, and I don't have that even there. Durable goods was about an hour ago, so okay, cool. Okay, no, nothing today. Do we have another one? Financial juice. Do they have a day? Do have they posted? Okay. 6.5. Okay. 98. Forecast. Wow. Forecast at 87. Now 98. That's dollar strength. That should actually send S&P higher. Okay. Interesting. That's a bit, okay. So how do we cool us down here so we don't get lift off? Boom. Is that there's a lot of volatility right now in the data set, but that's I'm not going to use crazy, but that's a bit much. And we are actually all-time high. That doesn't work anymore, apparently. Okay, do we have another one then? No. Consumer USCB Consumer Conference. The Google. See if we can find it. Yep, Spipsy. Okay. Okay, it's not that bad, I guess. But yeah, it's definitely something. Actual, why is it not showing in the data set? Like it has not been posted or something? Like what's wrong with these things? It's supposed to be up there. Okay, so more than anything else, we have seen decline. We've been above 110. So okay, I'll take it. 104 at least. I'll take it. It's a rebound. It's people being a bit more, but also to remember that this is that they are just as optimistic as they were back in 1985. Just for reference. So there it is. Yeah, it's about good. It's about right. So BGP, did I give you a great answer? And yeah, okay. So that kind of sends, well, it hasn't done as much damage as I thought it would do. But I still hope, I still stand away, and I still don't like Eurodollar in the position, and for that matter, Aussie dollar in the position of where it is at the moment. Given that Aussie is coming out of a range more than anything else. So yeah, I think that's pretty much okay. I think I've done this for 10 years. So I think now also not necessarily experience can be whatever, but what I want you guys to do in whatever you do and in whatever capacity you do, you always go by data. You always go by behaviors. You always go by money flow. You always go by what is the market telling you to do and what has it told you to do before. And more than anything else, the market has, and the news is really trying to make you scared and give you a lot of fear. So you're like, I don't know. But the data says, and the data proves that if you hold this S&P trade for 10 years, you're always going to be profitable. Okay, that sounds ridiculous. But as an investor, you have to have some part of your portfolio to be okay. What is actually profitable? What is actually always going to be making you money? And can you just park the bus and buy and take all the money into S&P 500 and Nasdaq and US 30 and Russell? I'm not telling you to invest anything at all. But all I'm saying is, where does the data leads you to do whatever you do? And I found out that going into June, end of May, is a risk-on situation where we're supposed to be risk-off in May, and we haven't really been. Risk-on in first week of June, and then second week risk-off, and then there is the FOMC meeting, and after that, my experience is no trend works after 15th of June. The same price, you can trade and trade and trade as much as you want in June and July. 15th of July, you're probably going to pick up the same price as you tried to buy or sell in June 15th. And by the time, and that's where you can have a trend from mid-July to August or so. And I don't really know in advance which direction it's going to be, because there's not really a driver or a sentiment that really drives July more than it might be the overall view, or it might be, I don't know, tariffs or whatever. And even tariffs doesn't really send things in the direction. I remember back in 2018 when Trump tried to do tariffs against China. Yeah, I did, but there's nobody at the desks driving the price and driving the market because they're on holiday. They are on summer vacation. So it's just algos and your other buddies that is off uni trying to make a buck in the meantime. So yeah. So in that sense, and what I'm saying today is probably boring and everything, but I'm really excited that Aussie dollar, US dollar is falling, euro dollar is falling, pound supposedly falling, and New Zealand is falling. I don't like how deep it is. But tomorrow there is RN Reserve Bank of New Zealand monetary policy meeting, and that can create some volatility, and doesn't really create a lot of volatility, but it's driven mostly in Europe. So if you have a 4 a.m. European time statement, you're probably not going to see a volume until London, and you're more than likely going to see like a drop on New Zealand dollar, US dollar, and then it rises. They're likely to cut one right now, and they're likely to cut a bit more later this year. But in the grand scheme of things, the market has only priced in about 60 basis points, about 0.6% of rate cuts rest of this year. So it's not really a lot. They have also come down to some kind of level that the market is pretty much okay with. Australia is supposed to cut a bit more. Currently expected 2.5 rate cuts at the moment, but for New Zealand tomorrow, as I'm going to pick it up. I haven't bought New Zealand yen this morning because I'm expecting that to happen. But on the other side of New Zealand yen, it kind of went higher. I mean, it was fun, but also what my entry would have been was about I would have been 50 pips in drawdown, and it would have given me 72 pips, and 72 pips away from entry when we have a central bank meeting is not really that much. It's not really that much. So that can go back to break even, then you're out, and it goes in the direction, and you're going to be angry at yourself because you tried to buy it, and then short-term volatility kicks you out. Only instead of just waiting for tomorrow, then do the trade after the fact that you actually know what they are actually talking about, and then you can make an informed decision. I don't like doing it before, because if they smack the market like JP did last time, then you're the one that feels sorry for yourself, because at the end of the day, it's the central bank's our daddy. You can't really do anything else about it. Do you think we have Trump's summer ahead of us? Do you know what? All I'm going to say is whatever I say right now is only valid for right now. What President Trump, what President Macron, what Prime Minister, what is that called nowadays? Not Benarchy, the UK guy, and it's not even Liz Truss. So whatever that UK guy is called, or the European president, which he called their von der Leyen. What they were going to do tomorrow is beyond my control and beyond my beliefs, and I can't really adapt to it before I actually have it in my hands. And then I can make a decision. Do I trade on it, or do I leave it alone? I have also had students coming to me and say, I mean, I don't want to trade now because Trump is just making everything difficult. And I totally understand. I totally believe you. Is your dollar going to 120 help ball out? Absolutely. I believe that's absolutely fantastically true. Starmer. Yeah. You see, he hasn't given me a good impression yet. So there is that. But it's just, I'm trying to talk while thinking. So half of my brain doesn't work. It's trying to talk as well. So point being is we as traders are only going to be adapting to the information we have at any given time when taking the BGB. Is he really Sir? Has he been crowned? I don't believe that. That's probably no. I don't think it's. I don't think it's crowned. I don't think so, because that would make me a bit more. Yeah. Anyways, so hello, Bella. So gold, people. Everyone, like, hey, what do you think about the gold? And I feel like I'm like Trump now. I don't know why. My direction, generally speaking, is gold going higher. As long as US CPI falls. Now, there's a problem with that. What do you think the problem is? The problem is summer. The problem is that I'm expecting inflation to get a beat up coming into the next, more than likely July data release, July release for that would be the June data posted in July. But also there's a potential for the one that is posted from May, data from May posted in June. And that could send dollar higher, gold lower, because gold goes higher when we have lower inflation and we are thinking the market, the economy is going to die and everything is going into recession and we can't afford food and water anymore. And in the moment and the days we have food and water and we are pretty much okay, this one takes a turn. And I said previously, I don't like how the market reacted to 3,500. I liked that it had a bid. It came down to 3,125 or so. I like that. But right now that I make a double kind of bottom again at 3,280 makes me question everything here, short-term wise. So that makes me also, unless I get that kind of situation, I get like a full reversal again, and we also reached very good resistance. Then the good support that I can see is 30,150 or so. And that's how difficult gold trading is. That's resistance, that's support, and everything in between. Yeah. Oh, it was just circled. Everything in between doesn't really matter to me because that's how my life kind of looks like right now. Something like that. So, and if you're wondering, did I just make that because it reacted there? No. I have done that for a million years. And the reason why is I like that is because it's the double bottom and the double top type situation. And the resistance is based upon that bottom there. You could also do the same here, then say that you want to pull back to that level and then it falls tomorrow. Okay. Then I'm sorry. You want to buy? Yeah. Oil, sorry. Yeah. You want to buy current price? Or oh yeah, you're looking for lungs. Same situation here, sir. Is you're stuck in some kind of range. And the bullishness that was coming out of here seems to have died out. And the critical error or the critical part was lack of a new higher high there. And I saw somebody saying that our what do they call Amarco, the oil company of Saudi Arabia, makes a lot of profits. Yeah, because that profit is going into funding the government and the public companies that they have. So because their operational costs, if you're going to fund the government and everything, all their projects are supposed to be funded, they need oil price reportedly about $80 or higher. So right now they're running at a loss. But on the other side, yeah, they're making buck because they have the lowest cost of production per barrel of oil in the world, reportedly about $10 to $12 reportedly. I can't verify those names and those things, but there's that. Yeah, I agree. So right now I'll be somewhere in the waiting for it to go bullish. That's what I wanted to say. So did we do dollar yen? I thought I saw that you wanted it to look for a short on it. Yeah. Okay. Fair enough. Trend is over. I would argue. There is your chance at 144.50. Euro yen continues higher. Pound yen continues higher. Det är muligt då. Ja. Okay. Fair enough. Good game. GG. I have taken the profit. I can't do anything about it. But yeah, so that's that. But no, I can't change now. Oh, I can't change it now. Because if it fell like it did, like the hour candle on pound had a bit of a drop lower, and if it continued to drop lower, then no, I wouldn't. I would be angry at myself. So no, this is fun. This is all good in games. Dollar Swissy. I mean, if you believe that Swissy can go lower, dollar Swissy can go lower, then yeah, great. But sell was there. Sell was there. That's the true sells you're allowed to take in my book. And now you're so late and so late and so late and so late that if you hit stop loss right now, it is so likely. It is, in my book, this is 30-70. So 30% winning, 70% losses, because what market really finds sells is up there again. And that's where the real sellers are. Here's those micro. So to me, nothing really. So today I want to celebrate my Aussie yen trade, my Euro yen trade, my pound yen trade. Thank you guys for joining in, and I'll see you guys for Friday if we can get a better entry. Boom.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Tuesday. Welcome back. Markets are open, and big gap higher on the announcement that, that 50% tariff stuff that Trump talked about last week. We're going to go ahead and pause for 90 days, give everyone a chance to line up and negotiate. So is that a huge surprise? Not really. Last week was the bit of a pullback because of the announcement that we're going to tariff the entire Eurozone, and now we're going to negotiate and probably make them less, plus a 90-day pause. So it just kind of cements the fact that this whole idea of tariffs and trade wars, I keep hearing the saying like trade war, it's more like trade more. But it's just because we're throwing threats out there and then pausing for 90 days just to force this negotiation window. So anyway, markets gapped up higher, right? We're up 1+% of the S&P, almost 1.5%. NASDAQ up almost 2%. Dow's up over 1%. Russell's up over 1.7%. We're still trading inside a couple of weekly candles here. So this now goes back a couple of weeks. Resistance, and I would say last week's low would be support. Obviously the market can do whatever it needs to do, whatever it wants to do. I still think this is going to be a bit of a struggle to actually go significantly higher without having some type of pullback. From this low to, I really thought this would be the high, having this low to high right around all the clustered EMAs. We go back to go back to these moving average clusters. So this is where I'd expect to see prices pull back. You know, so we'll see what happens. Today I'm looking for an intraday move up to around 5,900. It is happening. So that was at the open around 58.50. I thought this would be able to get up to about 5,900. We're only 9 points away. So do we, you know, get to 5,900? Do we stay there and then pull back? Is that a resistance level today? That's what I'm watching for. It looks something like this. So if I zoom in here, these are my resistance levels. So 58.95, 5,900. Price is gone basically, you know, straight up this morning for around 40 points. And I'm looking to see if this is going to make its way up towards 59, pause, maybe make its way back down to recenter on the day. We'll see. But I'm watching. I've got a iron condor in with a price around 59.10. Let me double check that here. 59.10 is my call side, and then I sold the 58.20 put. So right now here, positions. So it's upside down about 15 bucks right now. I've got some expirations to monitor this week. I might have I put in an income collar trade on the SPY this week. This is likely going to get called away with today's gap. My break even is 578.30. 578.30 gets called away at 583. Make 470 bucks. I took this trade last week. Trade's been open for 4 days. You know, make almost 500 bucks. It's not bad, and I'll just reposition. I'll take another 100 shares, do another collar income trade. Probably go out, you know, 3 to 5 days, 3 to 4 days. Try to sell like a 0.5 to 1% higher. Have the put. So I'll just consider this trade. Otherwise, I lower the cost basis. The whole point of that trade is to lower the cost basis. I mean, I'm not super stoked about buying shares like at fresh highs again, but in case this market's like, just keep melting up, I just want to have some downside protection. Let's see, Bitcoin's up to some fresh highs. We'll take a look at that this morning. I'm watching that 5,900 handle for some resistance. Okay, so on the weekly candle, right in here, we're still in a bit of an indecision zone, like I said, right? So this level, watching these equal lows. So this is now, you know, 1 week that kind of established the range, 2 weeks that tested the range. This is the third week. Are we going to go anywhere? Do we have any major news this week? It's the last week of the month. I think we have core PCE this week. That's about it. Consumer confidence already came out. Actually give us anything. What a crazy wild run in swing like sentiment this year. Extreme bearish for, you know, 11 weeks in a row. Consumer confidence now printing higher. What else is happening this week? Let's go high impact. Anything high impact this week? RBNZ looking to cut rates on Tuesday. Median minutes on Wednesday. GDP on Thursday. This will be a big one on Thursday. So the quarterly GDP is forecasted also print negative. If we do that, that would be 2 in a row. That'd be right. Or would that be the first quarterly print? Is this a negative GDP print? Last one was February. All right. I guess we'll see what happens on Thursday. This is a negative print. This is the big question, is like, are we going to see negative GDP? But everyone's questioning the integrity of the data because of what happened with trade war announcements. Everyone's kind of front-loading inventory, front-running supply, hoarding inventory essentially to have stuff on hand. But anyway, that's potentially the big impact news on Thursday. Unemployment claims, which have been steady. I've said this whole year, if we don't have unemployment rates, claims, continued jobless claims, if they're not trending higher, you know, the U.S. will avoid a recession. It might be like a soft recession. It might be like a rolling recession where different sectors feel it at different times. But anyway, market's still just kind of rallying up today. Anything else for the week? PCE is on Friday. I'm looking for let me go year for year or year over year. Let's go to the Bloomberg calendar. So Friday PCE, end of the month. 8:30. So I don't see any forecast for the PCE. So year over year, previous was 2.6. That's core PCE. And then there's the year over year, previous is 2.3. So will this be an improvement? Will we be, less than 2.6? Will it be less than 2.3? If so, that might change the Fed watch tool. Because right now the probabilities are they're not doing anything until September. So still looking for a pause in June, still looking for a pause in July, and possibly that first cut coming in September. That's all subject to change, but I'm going to take a screenshot of this right here and just mark it for today, just in case on Friday after PC news, is this changed by the end of the week? So I'll make a note of this and we'll discuss this on Friday. So Fed watch tool here. So Fed watch tool, Monday 5/27. There. Okay, so we'll see if this changes for the week. But right now, the Fed doesn't want to do anything. So we'll see what the market does. All right, let's go top down. Markets are green today. Let's go to the heat map. %76% of stocks advancing. A lot of good stuff leading the way. Tesla's up a lot today. Mag 7's up a lot today. Palantir, Oracle. Let's see. I thought I had some trades on Oracle. Let me double check. Nope, that was profitable. I've got some trades on Dell, some PayPal. I'm going to have to do some rolls. Let me check my expirations this week. So I have that trade for today. That trade is, I don't know how that's negative. Interesting. I don't know how that's down. We've gone up, unless that like pivoted last week. Okay. SPY. That's my income collar trade. IBIT, I've got a roll this week. I'm going to try to roll the 61 out another week or two. Futures. That is a cheap hedge. Son of a biscuit. All right. Well, that's a cheap hedge I'm going to lose on this week. Snap up to 840. Russell, I've got a roll. I've got 200 calls. I'm going to roll that again for some income. I'll roll that on Thursday or Friday. TLT, diagonal spread expires this week. Okay. Intel, I've got a collar trade that expires this week. So I'm going to write these down. Tesla, got a roll this week. Lyft still running, uncovered. SLV. I don't see anything for May. All right. So this top list, income SPY, collar, IBIT covered call. I'll take a loss on that small hedge on futures. Snap is just a collar trade, so I need to roll that or establish another covered call. Roll the Russell, and then either add another leg to my diagonal on the TLT, and then same thing on Intel. All right, let me write these down. So SPY, IBIT, Snap, IWM, Intel, and Tesla. All right, there's that. So keep an eye on those. There's our heat map for the day. Currency strength, just revisiting. Dollar showing a little bit of strength, not a ton of volatility. But let's go DXY. Okay, go back to the daily time frame. So what I say would happen on the dollar, I said be careful on selling this first break of the trend line. If anything, this would be testing the lows, maybe going slightly lower, but expect a pullback. Okay, so breaking this trend line. Look, if the dollar pulls back again, it wouldn't surprise me at all. So if you're short, and look, I'm long euro dollar. Okay, so if this is going to go back down to retest this low or go slightly lower, if this dollar makes a fresh low, I would be protecting profit down here. I don't think it's going to go too much lower. If it does go lower, it's going to be, in my opinion, divergent. So it wouldn't be a big surprise to see this thing go low to high, higher low to higher high, and then we look for a bigger sell trade. Okay, which should offer up, and we'll see how this euro dollar plays out. This could be a swing to the upside, high, low, lower, high, lower, low. Okay, which means I'm going to sit on a drawdown for this one. If it gets to the highs again, I'll take my profit. But if it pulls back where we have the swing coming back down to this area, I'll hold this trade open. I'll look to get filled on trade number 2, and then I'm looking for retest of the high. So I built in small positions, level 1, level 2, level 3. That's the trade for me. Okay. So I just wouldn't be surprised if the dollar's range bound or, high or low to maybe equal high or higher high, and keep an eye on it. Right now, a weakening dollar would be, kind of the better situation for this entire trade wars. Like a weaker dollar helps the world, helps trade. But how much weaker, I don't know. I don't think it's awesome to see the dollar just get beat up. Like this is one of the worst starts we've had since like 95. So it's a pretty rough start for the dollar. But at these lows with such a big move, I could see some range bound trading and still have some resistance around like this 102 handle. Oil still within a range. It's like I keep looking at oil every day, and it's like it just stays in a range. You'd think it'd be an easy trade. It really is. I would just say I wouldn't want to trade oil without something defined, right? Like a iron condor on oil would be great. I just wouldn't want to do like an undefined risk trade, like a strangle, even though oil is very cooperative in this range, just in case it gets like some crazy volatile move. Natural gas, I do want to add another leg lower, which I think I did. UNG. Okay, so I need to add another leg to this. My break even on UNG. See if I can get something for this. So UNG, my break even is $10.88 above the $5 strike. So my break even is $15.88. We're trading at 17 bucks. Let me see what this looks like here. So if I went out to the end of the month, which is this week, my break even is $15.88. Okay, so I could sell in the 17. Gives me some profit there. 17.50, maybe go a little bit further out in time. Go out to the June. This is a little bit better. Maybe go to June, sell get $1 off. So go 15.88 minus $1. Get it called away at 17. Make 212 make like $2,000. That's not bad. Going out 24 days. I'll go out 31 days and see what that looks like. think I'm going to do this one. So I'm going to try to sell the 17. Where are we at here? I do think this whole energy independence, if we're moving like nuclear is probably the last resort of where we'd like modify our energy to go nuclear. I think natural gas is something the U.S. does very well and very cheap. And if it's going to be like deregulation and fracking and all the stuff that was questionable as far as environmental concerns, I wonder if this is going to drive prices lower just because it's in high demand, but it's so readily available. So I'm not trying to get super cute. I thought since we finally got into this buy zone that natural gas would start to run pretty nicely, but we've reset pretty hard and now it's sideways. So I think for me, I'm just going to try to turn this into generating the income as opposed to looking for some big, huge move. So I'm going to go ahead and look at my trades for UNG, which is right here. I'm going to sell another piece. That would be selling the June 27th. It's out 31 days, selling the 17 for over $1. And see if I can, let me get like $1.10 for this, hopefully. Come on. $1.10's not filling. $1.09. Filled at $1.09. Okay. Same thing here. So this is $17, $9. Filled at $1.09. Filled at $1.09. Okay, 7634. Fill at $1.10 on that one. Okay. Getting there. Just got to put these diagonal spreads in. $1.09. Filled at $1.10. Filled at $1.11. Hey. Filled. This one has no UNG. This one. This one. This one. Okay, just a couple more. Okay, I think that's it. All right, so updating my tracker here. Added new sell call, which is the June 27, $17 call for $1.10 credit. So that'd be 1088 minus the dollar and change. 1088 minus the $1.10, 978. Add that to my 5. Puts me at a 1478 price break even. 1478. Get it called away at 17. If it gets called away at 17, I make 222. 1, 2, 3, 4, 5, 6, 7, 8, 9. So about 1,800 bucks. Yep. So just shy of $2,000 on the trade. All right. That way it's one less thing to worry about. And then I'll do the same thing on TLT. So that one's checked off the list. Okay, gold and silver. Gold is playing around with this kind of channel, like I talked about. You know, if we're making lower highs and lower lows, this could be just a very organized retracement. So organized retracement. If we get, I mean, and maybe it looks like that, maybe it doesn't. But as long as we are respecting this high and having some type of consolidation pattern, what I'm going to try to do here is if we have a low, if we hit a fresh low on gold, that would be, to me, the opportunity to start getting back involved in adding more shares of GLD, adding some option trades to GLD, and probably doing a income trade on gold futures. So between GLD, GC futures, I'd like to see, like, you know, low 3,000s, between 3,000 and 2,800 in this area, trying to position for some additional income on gold. Okay, silver, I'm liking a little bit more. It's still not going anywhere. I'm going to add more silver if we hit 29. I'm going to add if we hit 26. I was watching this little choppy zone last week to see if this is going to break and pause and maybe, you know, work its way up to some fresh highs. I know that, you know, if we're breaking resistance, I like this trade a lot. But the key is we have to take out this high, and hopefully we're in some open space above $35 to look very bullish. Bitcoin. We had highs of Bitcoin around 112. We're hanging out at 109. We are overbought with divergent conditions, so I don't expect this to go too much higher without some type of pullback, which is why I'm going to roll my calls on IBIT, because I'm looking to see, you know, if this turns over a little bit, I want that call to be, you know, full credit, or just give it more time and see if I can just collect the income and lower my cost basis. Okay, so I'm looking to see if Bitcoin will, I mean, it might just be something like this. Just wait for it to break a trend line. If it rolls over on the right-hand side of that trend line, then we, you know, pull back into this area, You know, there may be a higher low. It might pull all the way back into this area, which I think might disappoint some Bitcoin bulls. But if the stock market rolls over, I think Bitcoin will do the same thing. You know, so if the stock market rolls over and falls maybe 3-5%, I think Bitcoin will go with it, and we'll see if that offers up a chance to, you know, find some dips in stocks, find some dips in Bitcoin, and I'm just going to stay the course. So, you know, I still like gold to the upside. If we get pullbacks, I want to see 3,000 to 2,900 pullbacks. Silver, I'm long silver with one of my bigger like metals positions is silver, and I just want to see if it'll break above 35. If it pulls back to 29, pulls back to 26, I'll add some SI futures. I'll add some SLV. Okay, IBIT's up here at 62. I've got a covered call at 61. I've got also a put. I went out for like 70 or 80 days. Maybe let me see. Did I go out farther? I put a pretty cheap put in here. IBIT. Where's my put? There it is. So I went out to December and bought a $45 put. All right. So this is a December expiration, 45 long put. So it's out of the money, but if this starts to roll over, so this rolls over in any way, shape, or form, I paid about $2.50 for this. So if this rolls over and I can turn this into, I don't know, $5 or better, then I'm going to lower my cost basis. That was the whole point, is just using this a bit of a hedge to like hopefully lower my cost basis. All right, let's see if this 5,900 level today is going to act as resistance. All right, we're getting close to that. This pending at 59.20. Okay, I'm going to modify this trade. $1.80. Okay, making a quick modification here. By 27 expiration. So 59. All right, see if that works out. I'm looking to see if that 5,900 level holds resistance today. So it's been just like a slow grind melt up all day, hitting some of these big gamma levels. Same thing here on my chart. You know, for running up this level, hopefully this is enough to hit some resistance and then fade back down a little bit and turn $1.75 into, you know, maybe 75 cents or less. So this is a bear call combo. So pulled in 90, pulled in $1.75. This one I'm going to close out for, let's go 75 cents in this one if I can. All right, so keep an eye on that one. We're good on Bitcoin. MicroStrategy, pulling back. I still have a covered call out to the end of June at 310. I'll still roll that if I have to. Coinbase, maybe fading slightly. Copper, see if I can get back in this old lottery pick here. These three lines, it's a very inexpensive butterfly spread. I'd love to see some copper indecision and somehow get lucky on that trade. This was a max risk of $90 for a potential reward of $1,400. I just need to see price somehow dabble back and forth between those green lines. How to trade the yen long without paying negative swaps. Good luck. If you're long, so you want a stronger yen? What's your trade? If you're trying to be long the Japanese yen and you don't want to pay swaps, you really can't do it in the Forex market. The way I'm trading Japanese yen long is trading FXY as a stock. I own shares of FXY. I trade it like a stock. There's no fees on this for me. Yeah, if you're bullish yen, this is to me one of the best ways to do it. You can go Japanese yen futures or you can go FXY. So either this would be 6J is your Japanese yen futures, or FXY, you can buy it like a stock and own the shares. That's how I'm doing it. Because I don't want to pay swap. I feel like it's just a light theft every single day. That's why I'm holding a lot of the Swiss pairs, because it's positive swap. Yeah, FXY. That's like owning the shares of Japanese yen, spot price. Basically, this instrument, if you go FXY, it's basically the inverse of the dollar yen. So dollar yen, you have this, this would be like the dollar yen low at 140, right? Goes back up to like 162, all the way back down to 140, back up again here, back down again. So that's the dollar yen look, and this is the inverse of that. Right? So if you flip this around, here's your dollar yen. You see that inverse pattern? So there's the floor at 140. This could be a monster head and shoulders if it breaks this level. Dollar yen could potentially be going to 120. That's a big deal if it happens. I think that's a big deal. So FXY, if I measure the move, which I have it right here, if this is going to be a head and shoulders measurement, that would be, FXY is going to 74. I own shares of this around 59. So I'm not going to make as much money as I would if I was, crazy leveraged into Forex market, but it's a lot safer trade. It doesn't cost me any money. So that's one way of doing it. What's non-US? There we go. EWJ. Look at this bad boy. EWJ. I have some shares of this one. This is long Nikkei. Now it's creeping up $3,000. What's up? Okay, just got some shares. Nice fresh highs. This is a Nikkei 225 index that basically removes the bottom 15%. So you kind of get rid of some of the garbage in the Nikkei, and trade most of it. So anyway, dollar cost average in this one up a few bucks, and I'm going to ride this one a little bit higher with some non-US. That's another way. DAX up to some fresh highs in Germany. FTSE just shy of the highs. I mean, again, there's a lot of good stuff happening non-US. China, Brazil looking a little bit better, bouncing off the 200 moving average. Latin America, same thing, bouncing off in a nice little buy zone. And I'm not like crazy aggressive on these non-US plays, but I do have some exposure. I think I've allocated about 7% of non-US exposure. SCHY, the Nikkei with I'm not gonna say FXY, but that's kind of a non-US. It's more like Japanese yen. But between EWJ and FEZ is my DAX play, ILF, EWZ, and then SCHY. That's 5 different instruments where I've allocated shares to it. Mags at 52, still a lot of indecision. Okay, this is another one. So we have, is it this week we have earnings? I think Nvidia has earnings this week. Yep, so it's tomorrow after close. Nvidia has earnings after close tomorrow. There's probably a bit of a make or break happening here. I could see the market getting excited on an Nvidia gap if it goes to the upside, but I mean, would anyone be super surprised if the market gaps up on Nvidia and then fades, and that kind of puts in a near-term top? Obviously, if Nvidia misses and the market doesn't like it, then Mag 7 and the market's going with it. So I would even put this probably top of the list of things to watch this week. Yes, we have GDP on Thursday. Okay. We have core PC on Friday, but I think Nvidia earnings is probably going to be more of the things to watch. This will be tomorrow after market. So Wednesday after close, what's Nvidia giving us? Then going into a GDP print Thursday, then going into PC on Friday. Right? So we'll see what the market responds with. Tesla up to some fresh highs again. Let me take a look here at some, potentially some overbought, oversold conditions. Let me find a new workspace here. This will be my little harmonics. All right, let's go Tesla, 354. So daily time frame. Okay, I know this chart's messy. I just referenced my relative strength and momentum. So we're making some fresh highs in price. We're making lower highs in momentum. We're making fresh highs in price. We are overbought with divergence. So I can see, at least in the near term, the market pulling back. Axe says, what if I'm bullish Swiss? Is there a stock? I don't know. I think it was a futures trade. Let me see what it is. 6C. I don't know if I have a US instrument for it. 6S. If you trade futures, 6S is your futures feed. I don't know if there's an ETF for the Swiss. I mean, if you want to get long the Swiss, you might as well just be long gold. Honestly, like that's kind of the correlation. Like I'm fine being long gold. I'm playing the Swiss for some negative swap right now, but I don't have, other than 6S, which is the Swiss futures feed. I don't know if I have a US instrument for that. Let me check and see, do I have anything Swiss related here? So I've got FXF. FXF. So this is Swiss franc. Okay. This is most likely going to be the inverse of dollar Swiss. I will add this to the watch list here. Let's go FXF for Swiss. And I'll put this up with my Japanese yen. All my futures. There we go. I'll put it right in here. So copper, Swiss, Japanese yen. I'll just sprinkle it in there because if you look at this chart, it's going to be, like I said, the inverse is this is going to be dollar Swiss, right? So just take a mental picture here. It's like you've got resistance and then we broke the highs. Well, dollar Swiss, we had support and we broke the lows, right? So it is that trade. If you want to get long the Swiss, then you can get long FXF. And that would essentially say that you're selling the dollar Swiss. I mean, technically speaking, I don't love that trade. Based on, I mean, outside of this intervention low we had in 2011, I would say even if the dollar Swiss is going to come down to revisit this low, I still think this is going to be a monster trade back up eventually. Okay, I mean, I could be wrong, but I think from a technical side, I mean, the Swiss has been one of the strongest baskets the last 3, 4, 5 years, and probably to the chagrin of the Swiss National Bank. I don't think they want a super, super strong Swiss. But it also has been getting correlation with safe havens. It's been getting correlation with gold, and I can see that's why, you know, price is going up. But if you're long the Swiss, just know you're playing with something that has been pretty firm for the last several years. So just keep that in mind. Okay. All right. Where to leave off? We did some Mag 7 stuff. So Mags, go back to the daily. I was on Tesla. I mean, I could see Mag 7 also, just like the S&P, I could see us pulling back. I mean, pulling back into finding some of this gapping, this low, this high. Like, is it going to run into any support here that becomes resistance? Right? Here's a good example. We have Nvidia tomorrow after market. Let's say that we run right up into this gap. If we gap up here and then fade, I wouldn't be terribly surprised to see that. You know, I'd still like to get some mags exposure, but I want to see some pullbacks. Same thing on the S&P. I want to see some pullbacks. Okay. Apple. I listened to an interesting podcast this weekend. Firm that has about $2 billion under management. They just dumped their entire position in Apple, mainly just because earnings are not really showing growth any longer. Apple's more of like a staple company. It's one of the largest. You know, it has tons of buybacks. But as far as the growth and revenue, it's just not growing like it used to. So I mean, I think the valuations are still a little bit high for Apple. I don't know what that means for price necessarily. I mean, Apple still has a ton of cash. Fundamentally, it's probably still in a really strong position. But I think the growth vehicle, which would be where it's pricing in a lot of these upper levels, let's see what Apple's forecast is. That's actually pretty surprising. The snowflake analysis is terrible considering this is a Mag 7. Valuation, I mean, Warren Buffett has been a net seller of Apple for a while. I mean, he bought it with like a 10 times earnings. Now it's 30 times earnings. Fair value around 217, discounted cash flow. So yeah, I mean, I don't see it just falling off a cliff. I mean, I wouldn't mind scooping up. Like if we did fall back down to like 170 something, then I'd probably do some income trades on Apple using options. You know, if I was willing to own it cheaper, I'd own it cheaper. Amazon, let me see if I can set a chart alarm here. So I have some ratio spreads on Amazon. Broadcom, I did a like this big drop in April. I did a ratio spread. That was it. I didn't participate in this huge run to the upside. Google's looking better. I'm around break even on my dollar cost average, level 1, level 2, level 3. All my ratio spreads down here paid out pretty well. I'm happy to see that 150 handle held nicely. Meta, if we get a pullback, I actually think Meta is a good future trade. Meaning, like, I think they're going to be participating heavily in the cloud space, AI space, data centers. They have plenty of way. I don't know how Meta makes all of its revenue. I mean, obviously the days of just doing like Facebook ads is evolved in a big way, but they've also bought competition for a decade plus. So anyway, if they give us some pullbacks, I'd like to see some meta, lower levels, or try to find some option trades. Microsoft, you can see here overbought conditions with divergence. We're coming back to retest all-time highs. Microsoft may be able to get to all-time highs. I could see it fading a little bit. I could see a gap fill in here. I'd like to still, like I did early in the year, just do a lot of income trades and try to keep it out of the way. Meta and Microsoft both look pretty good. I just want to see pullbacks. Netflix sitting here at recent highs. Nvidia earnings tomorrow after market. We'll see what happens. Are we going up or going down? The expected move on Nvidia, by the way. Expected move on Nvidia percentage-wise is around 8% on average. So if we take a stock that's $135, so I go 0.08. So looking for about a $10 to $11 move on Nvidia. It's pretty big. $10 to $11 move that puts us up into maybe the 145, 146 area, or puts us down to maybe the 125, 124 area. So, I think that we all know this is one of the largest companies in the world, market cap 3.3 trillion. Is it possible that, move higher drags the entire market up? Is it possible that a move lower drags the entire market down? We'll find out tomorrow. So Thursday's trading day is going to be like, well, what did Nvidia do overnight? Sahil, you must come in late because we did gold, we did silver. Gold, I'm still long. I want pullbacks at 3,000, 2,900, 2,800. Silver, I'm long. I want to see a break above 35. I'm adding at 29 and 26. Tesla, I don't see my indicator printing with overbought conditions with divergence, but it's showing up on this chart here. Oops. So there's this is Tesla, so showing some, divergence in momentum, as well as some hidden bearish divergence on the relative strength. We are sitting at overbought conditions. Would I like short Tesla? No, I wouldn't short Tesla. I just want to see a pullback, right? So we'll pull back into, the 300s would be pretty nice. Considering we did break this trend line, we bottomed out here, break this trend line. This is a swing pullback. I'd love to see some pullbacks around like the 300 to 280 level, and then try to reestablish some longs. If Tesla makes a run to all-time highs, awesome. I just want to get some better positioning for it. Okay, Berkshire Hathaway, fine. Check Spotify. Spotify, you freaking turd, go down. I need this thing to stay below 670. I think that it will, but it's just getting close because my call side's getting tested. I've got 2 broken wing butterflies. Bond market, TLT is up a little bit, which is probably good. I'm going to look at adding another leg to my diagonal spread. I've got some exposure on TLT. So right here, it expires this week at 89. If it gets called away, if we're up to 89, I'm going to set a chart alarm this week. I've got a chart alarm set 89. I don't think we're going to get some big pop to the upside. If we did, I'd love to get it called away. I really don't want to have this on my portfolio at all. Bonds are going to be, they're fine. Like you just got to deal with, you're basically letting these trades, if you own bonds, you're letting them come to maturity, right? Okay, so I can sit on this and get 4% on a 20-year bond. Cool. But I don't want to see a 4% yield also give me a drawdown in ownership. It's like my positions are red because I like TLT, just all you're getting is, maybe you're getting at this point at these lows, you're probably getting price stability versus what just happened here, which was a drop of about, 10%. So you're getting a 10% drawdown in price, but you're sitting on this thing for a year of yield at 4%. Ideally it's supposed to help lower and offset volatility, but it just has made it less and less attractive after that Liberation Day announcement when the basis trade broke a little bit. I just don't love bonds. So anyway, we'll see what happens, but I'll probably wait until Friday and then just add another leg. I know my break even, so I'm just going to try to get out of this one and generate the income. All right. Anything on Fed funds? No. We have Wednesday minutes at 2 p.m., GDP on Thursday, core PC on Friday, Nvidia earnings tomorrow after market. Futures market, Credit spreads look okay. I mean, everything looks pretty tight there. Initial jobless claims, continued jobless claims, as long as there's no trend to the upside here, these are still showing that, the U.S. labor market is still pretty tight and resilient, which is good. Take a look at China really quickly. Alibaba hanging in there. Baidu, I took a small loss on Baidu last week. I'm still in this trade with some strong support levels. This whole idea of U.S.-China trying to get along, trying to play nice, become global frenemies as they kind of always are. Just the optics have been a little nasty this year. I'm hoping that there's a win-win. I'm hoping that the global economy can have a bit more of a global melt up. I think U.S. and China would both have to participate in that. I don't think it's one without the other. So if we want all-time highs in the U.S., I think we have to play nice with China as well. I'm not looking to stay long-term in China. I just want to see another run towards these highs. I want to get some technical levels to measure up. So I'd like to see Baidu, make a run into the 110, 115 handle. Alibaba, we've already had a huge run in this one. Probably pretty well supported. If you're watching Alibaba, support. We have support off the 200 moving average. So another opportunity to maybe look, see if it revisits those highs from last fall. So look and see if this, 200 moving average holds support on Alibaba if you're interested in trading China at all. Baidu, we're just sitting at these lows already, so I kind of like it. I have some shares of FXY I'm holding to see if we get to some fresh highs. JD, I need to add another covered call. I think this one already expired. JD shares, yep. So I have naked put combos and just the shares. I'm going to add another covered call. So I'm going to turn this one into more of an income sitch. Schwab dividend, Schwab growth, watching closely. I expect some pullbacks on both. If you're looking for a cheap way to trade, kind of the NASDAQ, SCHG, instead of 100 stocks is 200 stocks, but it's 200 tech stocks. That's an ETF that's only $27. So, I mean, if we have pullbacks here, most likely I'm adding some exposure. If we have deeper pullbacks, let's go from a low to high. Do we have a, 30% pullback, 50% pullback? I'd obviously be okay adding to this with a higher low and then see if we can revisit highs. So percentage-wise, that would be okay. If we pull back, let's say to 25, we have a run of 15% to get to the highs again. That'd be about the equivalent of getting that on the Qs with a fraction of the price. Individual stocks, Costco. I mean, I like the stock. I want to income trade it. It's too expensive for me to want to own a bunch of shares of it other than fractional shares. Walmart is fine. Nike puts her in. That's fine. Home Depot and Lowe's, I'm waiting on these a little bit longer. The strength of the consumer, I don't know if MasterCard, Visa, Amex are going to continue to go higher. They're already back up to all-time highs. So Amex is not, but MasterCard, Visa is. What's scary, though, is when you have I don't know. It's almost like credit cards win either way. When people stop making payments and they're going delinquencies, it's somehow credit card companies do fine because they're gouging people at 20+% interest rates. Progressive, I could see a top getting put in here. Not worth shorting necessarily. Palantir, a pullback would be great if you have a chance to buy some dynamic support. Looking for higher levels. This is probably, I'm going to make a bold claim here. I wouldn't be terribly surprised if Palantir becomes one of the top performing stocks, maybe market cap wise. It's at $300 billion right now. I don't think it's that far-fetched to think that Palantir could be a $500 to $1 trillion company. A $500 billion to $1 trillion company. This might be the evolution of the stock market. As in, you got Mag 7, which has basically been a great concentration for almost a decade, right? But at some point, there's going to be a rotation. Somebody else is going to slip in. The new Mag 7, it might have some AI names like a Palantir, like a, I don't know, Palo Alto, like a CrowdStrike, it could be a combination of things. But this stock, best performing stock of 2024, I think it's now on everyone's radar. I think if there's pullback in dynamic levels, it wouldn't be a terrible idea to be dollar cost averaging into that one. HIMS, I'm still long on this one with some ratio spreads. Carvana, not interested. Salesforce, not interested. O'Reilly, I called the top on this one around 1450. Uber, still kicking some butt. Took ratio spreads in this one. Lyft, I'm still holding long shares, looking for a bit of a catch-up trade in Lyft. Sector-wise, we're doing okay this year. Financials, industrials. All right, currencies. I'll go here just a couple minutes. Good. I'm finally going to pull back an Aussie CAD. I want to see a pullback in Aussie CAD into like a 50618 zone, and then look for a swing to the upside. Aussie Swiss, I'm still holding. A couple things. I might be getting out of this trade here for a win, and then looking to see if I get a pullback. So if this goes up into this cluster, right around the 200 moving average, I take profit. Then I get a pullback and I level back in with swing trades, and then look at a 3-wave move, and then take profit up here. So I'm looking for this on Aussie Swiss, New Zealand Swiss, very correlated. So similar price action. Aussie Yen, no trade. Aussie New Zealand, I'm just waiting. I'm just looking to like scale in long on this one. If we pull back to like 106, this will be interesting. The RBNZ is going to cut rates this week, looking like they're going to cut rates this week, which would put their official cash rate. So we're at 3.85 for the Aussie. If New Zealand cuts rates down to 3.25, that would actually give the Aussie New Zealand positive swap to the upside, which hasn't been the case in a long time, which means to me, I don't know how this reacts, but I wouldn't be terribly shocked if this goes up, trying to hit 1200 again, trying to hit 1400 again. Let me do this. I'm going to throw in, gosh, I kind of hate this trade right now, but RBNZ is this week, right? RBNZ is looking to cut rates tonight at 10 p.m. Okay. I'm going to throw in another. This is only 5,000 units. I'm going to throw a 5,001 unit trade in right now. So I'll go trade. Where the heck's my freaking... Do I not just have trade? What'll happen to my trade toggle? Trading pane. Let's see, instant orders placement, positions. Weird. All right, well, I guess I'll trade it through MT4. Usually I just have like a create new trade. I don't see it here. All right, anyway. So what I'm saying is I want a dollar cost average into Aussie New Zealand. I'm trying to hold out for these levels. I just don't know if we're going to get that with positive swap. I could see this going back up to the highs around 112. So I'm looking at, this is position 1. I wanted position 2 to be here, just didn't find it. So I might add a second position small and then keep this at 3, 4, and 5 just in case. So instant orders. I still don't see it. Whatever they did, they made it different. It used to be I could just go, sell, buy, and then trading or new trade, and I just don't see it. So whatever. All right, I'll place it MT4, no big deal. So I'm looking at taking a small buy on Aussie New Zealand. Now, again, my intention is this doesn't have to be like, where's your stop loss, Chris? I'm putting it way the heck down here. So if I'm in trade 1, small trade 2, this is still a 3, a 4, and a 5. Okay, if price is going my way, if I take trade 1 and 2 and it's going my way, I think we're hitting this level and possibly making a run towards this 114 level, which I'd be totally fine taking profit up here, right? So it's not going to be like a big order by any stretch. Aussie dollar, I still want to see if there's a pullback here. Is there a pullback that I can take a swing trade on Aussie dollar? I will wait for that. CAD Swiss, I will wait for this one as well. Is this going to make a run back up into the 200 moving average, into this cluster, and then we have a wave 3 or wave 5? Let's find out. CAD yen, this support level held. I'm not in the trade. Swiss yen, not interested. Euro Aussie, near term is pulling back. I didn't get the pullback that I wanted, so I didn't trade this one. Euro CAD sell trade is still showing the right direction. If you were, selling equal highs or selling this little breakout, I think this still works its way back down to like 5,400. Euro Swiss, I'm still holding long. Euro pound, nothing. Euro yen, nothing. Euro New Zealand, similar to Euro Aussie. If you're looking at, maybe buying here and going up, It's tricky with RBNZ this week in case it's messy, but I would not be shocked to see if this thing does, head back a little bit higher. Euro dollar, I'm still holding long. As I mentioned before, if this is a swing and then we have a symmetry move back into this pullback zone, I'm still going to add into my euro dollars, looking to see if we get back to the highs at 1500, 1550. Pound Aussie, I talked about buying this equal low around 205. I didn't buy it. I just said if you wanted to put in a stop loss right below these levels, pullback worked out for maybe 300 to 400 pips. Pound CAD looks like a sell trade. I don't like it as much as EuroCAD. I would probably just stay out of this one, but it looks like a sell trade as long as we don't invalidate these highs at 8,800. Pound Swiss, it's getting close. 1250 to 1350. If you're long pound Swiss, that's a good spot to be grabbing some profit. Pound yen, scalper's paradise, but no real structure that I'd like to trade outside of short term. Pound New Zealand, like pound Aussie, heading back up. Pound dollar did make a surprising move. I wouldn't be terribly surprised if this puts in a bit of a pattern top, but I still think euro dollar is a better trade. If you want to take a lucky stab at the pound after we sweep these highs, you sell the candle here, stop loss above the highs as long as you don't invalidate above 3,600. This thing might work its way all the way back down to like 3,200. We'll find out, but it would be like a low risk, high reward setup on pound dollar. New Zealand CAD, good. I'm getting a pullback that I want. I want to see a pullback into this area and then look for a swing trade on New Zealand CAD. Aussie CAD, New Zealand CAD, I do like those trades. New Zealand Swiss, still waiting to see if this will make a run into the 200 moving average. That would be kind of my wave 1 swing, pullback, and then wave 3 symmetry. New Zealand yen, no trade. New Zealand dollar, pullbacks. Maybe starting a trade in here. Maybe starting a pullback trade in here as long as it doesn't invalidate that low. And then open space to the upside. It's funny how the dollar, like the Fed might be one of the last central banks to cut rates. And yet the dollar's just been so weak. Dollar Canada, I'll buy this thing at like 30, probably 33, 3,200. That's about it. I'm going to stay out of this chop zone in the middle. Dollar Swiss, I'm going to see if we just break the trend line. This might just be a slow grind. It might just work its way back to the trend line, sell off again. But if it's divergent, I'm looking to see if we put in a pattern trade and then work our way back up to 92. I'm trying to get out of the trade here. I've got some long positions. I took a bunch of profit back here at this run at 92. I leveled back in with a break even around 85 right now. And so if we get back to this cluster at like 87.50 to 8,800, I'm trying to get out of this trade for profit. So I'm no longer trying to hold this thing to 92. Okay. All right. I think that's going to do it. I got to jump into a class here in about 10 minutes. But that's top down indexes, currencies, a little bit of futures, gold, silver, Bitcoin. Market's still hanging in there with some positivity today. We just had a bit of a directional run. Looking to see if there's any give. 1.6%. Is there any fade off of this today? Week is not done. What do we have this week? So we have Nvidia earnings, aftermarket Wednesday. We have US GDP on Thursday morning. And we have US core, well, I guess PCE and core PCE Friday morning. Okay. We do have some earnings this week, but I'd say Nvidia is going to be the big one. So we'll see how this combination of prices play out, what the catalysts are. That's coming this week. If you look at the weekly chart, I still think we just have some, inside candle trading. So a lot of structure in here, that high, that low. Is price going to be able to break and go higher, break and go lower? Is it just another week where we close out the month and it just stays in a chop zone, and then June, maybe a pullback coming in June? I would say June is going to be probably the opportune time for a pullback because July is typically a bullish month. So, anything can happen, but I would think if there's any pullback and there's a chance to run up to try to sniff out these all-time highs by the end of the year, by the year, July is a pretty good chance to do so. But August, September usually offer up some pullbacks as well, seasonality-wise. So we'll keep an eye on it. All right, I will let you go for today, and we'll talk soon. All right, thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.